HELOC, H-E-L-O-C, and that stands for Home Equity Line of Credit. And a HELOC is a kind of loan on your home that is a great way to use the power of your equity without touching that primary mortgage you have that may be at a super low interest rate.
Hello everybody, Sherri and Milynda back again, talking about VA loans and all kinds of things to help you out with your housing issues and your financing and the things that you want to do with your big investment and your property.
Yeah.
Today we got a special topic Milynda thought would be good to talk about.
Yeah.
Said when you think you want a little bit of equity out, so if you need it for lots of different things, a home improvement or maybe a debt consolidation or something like that, but you don't want to mess up your 2% interest rate, right?
Exactly.
So what's a good solution?
So what Sherri is talking about is called a HELOC, H-E-L-O-C, and that stands for Home Equity Line of Credit. And a HELOC is a kind of loan on your home that is a great way to use the power of your equity without touching that primary mortgage you have that may be at a super low interest rate. Because let's see, 70% of the mortgages in America are at 5% or lower right now. So we've got, most of the country is in a really low rate mortgage right now. And we also have the highest level of equity in those mortgages that we've ever had in America. So just a huge amount of untapped potential. And what does that mean for you as a homeowner? It means that if you are sitting on a mortgage with a sweet, sweet rate and you've been in it for a couple, 3, 4, 5 years or longer, you are probably sitting on a nice amount of equity in your home.
Yeah.
But you don't want to refinance, right? Because if you refinance your home, you're going to lose that great interest rate. So how else can you tap into that equity to do other things in your life without messing up that low interest rate on your mortgage? And the answer is a HELOC.
Yeah.
So it's a really versatile product that lets you pull out a small amount or a large amount depending on what's going on, but it lets you pull out some of your equity to use for various things that happen in your life. So one of the things that we've talked about before is that low interest rate is great, but you can't let it hijack the rest of your life.
Yeah, that's true.
I mean, really, you want to keep that, but it can't keep you from doing some other things that you'd like to do in your life, and a HELOC is a great option for that.
Right, and sometimes some of the people who bought during the time that interest rates were down so low either forewent inspections, or if they had inspections, they forewent having repairs done and renovations done. So this is a good way to address those things from a house that you bought 4 or 5 years ago, or things maybe you've become outdated, something like that with your home. But the funds are really, really flexible. You can use them for all kinds of different things. Could you use HELOC funds, say, for a down payment on an investment property? Would that
You could. You could
so
do
you
that.
Can use the house you have to help fund, some your investment portfolio, which is awesome. I've done that before.
Yes, I have a client right now who is getting a HELOC for. He has a business venture that he wants to start. So he's got a house valued at about $900,000, and the balance on his mortgage is really low. It's under $300,000. But he's at about 3%, so he doesn't want to touch that mortgage.
Right.
And he's retired, so he's got fixed income on his income coming in. So he has decided a HELOC is the best way to pull out about $150,000 out of his house, not touch his 3% mortgage, and then have that $150,000 for this new venture that he wants to start.
Yeah.
So that's an option. Like Sherri said, a down payment for another property, that's an option.
And while your mortgage may be at 2%, your credit cards may be at like 25%. I got a thing in the mail the other day for a credit card that was at 26-point-something%. I was like, forget you. But if you've got stuck in that loop of interest rates going up on your credit cards and that's kind of getting ahead of you a little bit, do a consolidation loan against your house and pay a much lower rate of interest, and then it's on house with you. That is a
huge reason to think about a HELOC. Truly, it can change your life if you use it for debt consolidation.
Right.
I have done a similar thing for myself years ago. Sometimes we look up from our life and we have accumulated some debt and we don't know how it happened, but We've got car loans at high interest rates. We've got credit cards at crazy interest rates. And maybe there's a personal loan or recreational vehicle of some type that got in the mix.
Appliances that go defunct. Somebody breaks an arm or a leg and there's
Yes.
medical expenses. There's all kind of things that
Stuff
can happen in
happens.
life that'll accumulate a little debt for you.
And a HELOC is a way to get a lump sum at a much lower rate than probably all of those debts that we're talking about right there, and just paying all that stuff off. And then you've got one low payment on all that stuff.
So what does this process kind of look like? How do they start the process of getting one of these? And what all is involved with do you have to apply for it? Do you have to have a certain credit
Yeah.
score? Do you have to get an appraisal? What kinds of things have to happen to get this?
The answer is you do an application like you would for any mortgage. That's the starting process. You're going to do the application. But after that, there's really a lot of variability depending on what type of HELOC you're going to get, because there's a few options, and how much money you're wanting to get out compared to your house value. So I would say that an example is you fill out the application. We're going to look at your current lines of your current income streams. Okay, so we'll need documentation on your income. That's pretty similar to when you got your original mortgage. So a short answer is it is an easier process. Generally, this is going to be a faster, easier process than that primary mortgage.
And less expensive.
And for sure, less expensive.
So you don't have to go to the title company to do a closing. There's no title policy and all that kind of stuff.
No, there's not a title policy. There's not any of that. For instance, the one I'm doing right now, we were able to do an AVM or an automated valuation method, which means that we don't even have to get an appraisal. Because this loan is a smaller loan amount than like your original big mortgage.
Right.
If you're, depending on what area of town you're in, if you're in an area that's pretty well populated and the mortgage company can approximate your value well enough without getting an appraisal, we may not have to get an appraisal, which we didn't in this case.
Right. And so the maximum that you could get, is that up to that 80% of the loan to value?
Depending on the loan product and the credit score, but 80 would probably be about the max. Yeah, and that's if the house was totally paid off. If you've still got a lien on the property for some of the loan amount or for some of the house value, then we're going to go in and make sure we're within the right parameters for that second.
Right. So you're not going to get upside down or anything on
Right.
a loan
Yeah,
like that.
in Texas, you can't. There's guardrails. Yeah.
Right. Yeah. And so this will obviously be at a different rate, but kind of what are these rates at right now?
Ballpark rates, I'm going to say good credit, and depending on the type, let's say 7s to 9s. In the 7s with good credit, and by that I mean like, let's say over about 740, although you can do HELOCs down to like 640. Okay? The important thing to remember though is we are doing this. Yes, that is a higher interest rate than your sweet mortgage that you are sitting with, that you are preserving.
But it's a third of what your credit card rates are going to be, and it's much less expensive than lots of other ways of
Yes,
finagling money out.
And the fees are going to be lower, and it's going to be
Yeah.
easier than trying to go get a personal loan or that you might not even qualify for.
You can do this over and over. Like you draw some out and pay it off, and draw some out and pay it off, or you can just make interest-only payments and then pay principal and interest together, or
Yeah, the ones that I offer, yeah, and we do have those. Anyway, but to get back to the rate, I see people getting hung up on that, all right? It is important to remember that is a great rate for all this debt that you're consolidating or compared
Right.
to a home improvement loan
Yeah.
or something else. So it is not as low as your mortgage, but it's lower than everything else.
right, and it's not a cash out refinance that would be way more expensive long term, because the whole loan will be at the higher rate then.
Yeah, so we're saving your home loan at that low rate.
Yeah, it's awesome.
There are HELOCs where you can take out a lump sum. I've got a product like that where it's called a line of credit, but really they issue it to you in a lump sum. And we can do that in like a week to 2 weeks, depending on how quickly you get documentation to make, and you've got your money that quickly. Then we've got some other options where maybe it is more of a line of credit, and you're going to take part of it out initially. Let's say the one I'm working with right now with my customer, he only has to take out 75% of the 150,000. He only has to take out 75% right now, so about 112. And that's all he wants to take out now. He wants to keep that extra about 45
Some reserves.
in reserves in case he needs it. So he's only paying the loan and paying the interest on the part that he's already taken out and used.
Yeah.
So there's quite a bit of flexibility in payment terms. We can do it on a 30, 20, 15-year note. Lots of options.
We're talking about VA loans specifically, right? You can do this on VA loans.
Well, you're going to keep your low VA. You're going to keep your VA.
Keep the low VA, but you can do this on
This
that.
is going to, well, yeah, you can have your VA loan absolutely and get a HELOC. Yes, yeah. So this is a standalone. This is not going to affect your mortgage.
Right.
That's important to remember. But it's also a lot faster process than it was with your first mortgage when you were buying the house.
Super good super good product. Preserves your interest. It's really flexible on what you can use the money for. Easy to do, inexpensive to do. The only interest increase is just going to be on that amount that you're borrowing.
Yeah.
What are some other summary points that
So if you're thinking about debt consolidation, before you even call me, just write down a list of what the bills are that you would want to pay off and what interest rate they're at. Okay, like the totals.
That's a good exercise.
And then that gives us an idea of what you would need, or if you want to use it you could do this as a home improvement loan. It's a great way to do a home improvement loan. Have an idea of how much the improvements are going to cost to do that, whether it's buying appliances or putting in new flooring or
Are you going to do the
like
work
that.
or somebody else going to do the work?
Yes. And so have a good idea of what you want rather than coming with how much could I get. We can work with how much could I get, but also it's important to not overextend yourself.
Right.
And kind of use this for a targeted reason to get yourself either out of debt or do your life project, be it a business venture or an investment property or home improvement. Don't take out too big of a loan amount. Okay.
Right. Yeah.
Yeah.
Okay. Well,
I know that was a lot.
yeah,
Blah, blah,
that's a
blah.
lot. All of a sudden working out. But if you have any questions about the
Yeah.
HELOC or if that's something you might be interested in, give Milynda a call. You can comment in the post, comment HELOC, and then we'll get back with you.
And then I'll reach out and see if this would work for you and what you're wanting to accomplish.
Yeah.